as you probably can guess from the image that I updated on Meetup to give you an idea of what my plan is, and obviously we'll go through the high level at macro, what I'm seeing on a crypto and other stuff, and then we'll spend a lot of time on looking at the super investors move. So that's mainly on my agenda. What else you want to talk about? Um, I'm looking. Okay, so Ross says Warren Buffett waking up with a huge UNH buys. Yeah, I mean that's made a lot more news than what the position itself is, and it is, I think, because of the reason that UNH stock was beaten down, but it's not a huge position. So we look at Warren Buffett's portfolio. I'll also look at and tell you, he's not the biggest holder of UNH anyway. So there is another one which has got more than what Warren Buffett holds in UNH. But Warren bin Warren, creates a lot of discussion whenever Warren takes a stake in any company, right? Pankaj say BMNR, in case we have not already discussed about it. I think we talked about it, BMNR. Probably I'll also mention today while covering the crypto side, because one of the topic that I want to cover on the crypto is around all this Ethereum stuff. What's happening with Ethereum, some of the price targets that are coming from street, and why it has run up whatever 65% over last couple of weeks, right? So hold on your question until then. If I don't answer it, just remind me on BMNR. Okay. Welcome everyone to our discussion number 288, almost 5.5 years, where we meet every Saturday in this investing dojo. Try to sharpen our mind, sharpen our brains. I really need this to keep my brain active. Otherwise, I'll start to vegetate. So thank you for showing up every week and helping me become a better investor. And our main idea is for us to learn from each other as a individual investor, right? And I'm of the firm opinion that no one cares about your money more than you do. So why not better take control of it? That's the journey that I have been on, and I'm hopeful that some of you will also start taking control of your own financials rather than depending on either government or some Wall Street firm or some financial advisor. So that's the whole target. We are all here to learn from each other. So anything that I say or we talk about is, don't consider it as a financial or investment advice. Always do your own due diligence before you invest in any company. We will talk about companies, and I'll give you my thesis, but that is just how I think about it. You'll have to figure out your own thesis about the company. Okay. So with that, let's talk about today's. Like I said, today my main topic. We will cover macro stuff and crypto and little bit on what's happening in the equity market. Then we will jump on to looking at 13F filings. So for those who are not aware of 13F, so SEC has a mandate about some of the fund managers who manage money for others beyond a certain threshold limit of their asset under management. If they cross that threshold limit, they have to file after every quarter in terms of what's their position was there at the end of the quarter. And they have a 45 days. So now for Q2, August 15 is when we hit that 45-day threshold. And you will see a lot of companies, these fund managers, who generally, the financial media will call them as a smart investors, super investors, smart money. Retail, they call it the dumb money. And so where the smart money, what did they hold as of end of June 2025? So we'll look into that. What I want to do is to look at it at a collective level. A lot of folks look at an individual level, but when I look at across the board, it gives them a little more insight. So I want to share that with you guys. And then we'll break out into some breakout rooms to talk about whatever suits you, or the topics that you are interested in. So we generally have a breakout rooms around option trading, fundamentals, noob investors, and options is pretty popular most of the time. That stays crowded, but you are free to join other breakout rooms and talk to other investors who are like-minded. So find folks from your own tribe. So that's overall what we do. um I think the regular discussions goes around till 12:30 Pacific time. Then I think the breakout rooms is dependent on whoever wants to stay for however long. I will generally drop at after 3 hours, like 1 p.m., but then I'll make someone else the host who can continue in the breakout room. That's more of a networking or mixer kind of stuff. Okay, so that's overall, how we conduct business here. So let's get into today's business. So first of all, I don't feel bad about selling my Palantir stock little early. I think feel much better. First of all, let me make sure you guys are able to see my screen or the document. I can't tell you multiple times where folks ask me, "Are you sharing anything?" All right, okay, I got yes from Nicole. Thank you. So I just came across a tweet, or I think nowadays you call it post, around how someone had posted in May 11, sorry, 16 May 2011, feeling bad about selling whatever 1700 Bitcoin at at 30 cents. So that person had bought for 6 cents, it became 5x. Why not take some gains? No one has gone broke by taking gains, right? Isn't that what the street suggest? A lot of advisors will talk about it, but then no one has made good amount of money by taking profits too early. Taking profits too early on a good business is equivalent to cutting your flowers rather than watering your flowers. And I think poor Greg, was craving about the fact that he sold them at 30 cents. And now the damn Bitcoin is at $8, right? I don't want to be in that position. Hopefully, he will have found the peace with himself on, he made his money. He made his 5x. Don't get me wrong. He made his 5x, but only if he had stayed with his conviction or whatever. If he took a lottery ticket, would have stayed with it. Probably. What's 1700 Bitcoin worth right now? What, 1.7 billion? Math nerds, get 1700. Make it easy on my, let's do with 120. Okay, 204 million is not billion, it's 204, not, still big amount of money. Anyway, so after I saw this, I'm like, okay, not too bad. I sold some of my Palantir earlier, which is okay. I think I still love the Palantir business. I just don't like the stock price at which it is trading, so I felt funny. Looking at a TradFi market, on the macro side, there's a lot of discussion around to cut or not to cut. I think as of last week, we had almost 90% probability market had that we're gonna get a rate cut in September. Now let's look at what's the latest probability is. Mm, Still 92%. I thought it actually fell down maybe on Friday or on Thursday, wherever we had the PPI number, it was down to some 85%. But 92%, not bad. So we are already, pricing in that we're gonna get one rate cut. I think Scott Bessent, our Treasury Secretary, want almost 150 basis points. I'm not sure we're gonna get 150 basis points because we had PPI which was much higher than what we were expecting. I think I do have numbers around here. Yeah, so let me go to the PPI number. So we got a PPI number in which headline PPI was 0.9% month over month, which was way higher than the consensus estimate of 0.02, like 0.2%, right? It is so PPI is a producer price index. This is what the inflation that the manufacturers, the producers of the good are seeing in their own business, right? If you're a manufacturer of, pick anything, of clothing, right? And I don't think we have many manufacturers left in the US who does the clothing, but there are some companies who still build jeans in US, and now they are seeing inflation in their raw material when they're importing from cotton and other stuff or cloth from other countries. So that's called producer price index. Is the inflation that they are facing, and that rose by 0.9%. Right. Eventually, market does think that if a PPI will rise, maybe subsequently, a few months down the line, the impact on consumer will also be seen. It's just because how much can companies eat into their profits, right? At some point of a time, companies will determine, maybe I need to pass on some of these cost increases to customers, to their end consumers. And that's the reason when the PPI came higher, the market was down because we thought, if PPI is higher, maybe the inflation will go higher. If the inflation goes higher, it means we may not be able to get the rate cut that we are looking for. Or maybe we'll not be able to get the same number of rate cuts that we were planning for. And that's the reason why market sold off a bit at the start of I think whenever the PPI number came out. So, but I think at least from a September perspective, probability is given that we're going to get a rate cut. Maybe 25 basis points is what market is pricing in. If we don't get it, that's not going to be good. But I think if we get the rate cut, we may or may not see much of upside in the stock market just on the rate cut on that day, because it looks like a lot of stuff is already being priced in. Right? So, buy the rumor, sell the news. I'm not sure whether we'll get the selling or not, but I am not expecting that, markets will rip higher just on the news of 25 basis rate cuts. It could be something else. Maybe the tone could be a little different in terms of Fed might become a little more dovish. Again, I think we still have a month to go, so we'll wait and see what happens. But if we cannot get a rate cut, I think it's not a question of if for September, maybe how much, and then how many times are we going to get a rate cut, right? So then we should looking at the history of a rate cuts. What could be our playbook? How do we want to play with it? Again, from an investing thesis perspective, this should be immaterial to us. We should always find great businesses and invest in that. I'm not going to make any changes, even though I'm going to talk about the playbook. I want to be very clear. I think I'm still have the same thesis, which I've been having for, I would say, at least start of this year. I continue to invest in little less investment in tech and the growth, and more on the dividend side of or dividend or value. And I'm just continue to play with that. But if you're looking for some short term and wondering how do you want to play this rate cut, there are a few things. First, let's understand the rate cuts and what the reason of the rate cut could be. If the reason of the rate cut could be preemptive, which is like insurance rate cut, means, hey, we want to do the rate cut so that we want to support the economy before economy worsens and we are trying to put a ventilator on it, right? So this is a preemptive one. If you have a preemptive rate cut, that would be bullish for equities. That Fed has taken leading role and to make sure that economy doesn't worsen. The job numbers that came out after revision, which got the BLS statistician fired, those are pretty bleak numbers. Now if Fed says, hey, I don't want to wait for another 2 or 3 months of bad job numbers, and by the time economy or the companies are already on ventilator, they'll be in the need of ventilator. Let me not even reach that situation, but try to fix it right now by cutting the rates. That will be bullish for equity. The other one could be reactive one, where we can clearly see economy is entered into recession, and then we're trying to do rate cuts. That's may not be good for the market. But today, it, I think we are looking at the former one. We got one print of a labor which was not that great, and if you get a rate cut, it is, hey, before that bad labor print start to weaken the economy, before we get into recession, let's fix it. Let's stem the blood right here. And markets already started to little bit price in terms, this rotation has started. Because if you get a rate cut, it will be great for certain sectors or certain type of companies. Right? One would be the mid cap stocks, or I should also say the small cap. Right? The reason is small cap stocks, mid cap stocks, they don't have a great balance sheet. So they will generally have to borrow money to run their operations. And when you borrow money, if a rate cut happens, you can borrow money at a cheaper rate. So you would generally see some of the small cap companies will either front run it, the stocks will front run it, the business does perform better if you have a cheaper loans available. So we did see in this week, the best performing ETF was Russell 2000. Small caps already kind of front ran the good news around the rate cuts. Right? Value investments, right? Dividend pay companies, equal weighted S&P 500 that generally perform better than the growthier part of the general SPY, right? The sectors which are cyclical, which are more rate sensitive, like home builders, real estate, banks, they perform better if you get a cheaper rate cuts, if you have a little more liquidity, if you have a dovish Fed. Consumer discretionary financial sector could also get a lift from upcoming rate cuts. So if you really want to play the rate cut, I'm not saying that you should, but if you want to play the rate cuts, here's some of the plays, moves that you have available for you. Also, so these are on the equity side. You can also play on the fixed income side by looking at the bonds, right? When Fed does the rate cut, Fed doesn't control the long-term bond or whatever percent you get on T-notes. It does control to some. I mean, when we say Fed rates, these are the overnight lending rates between the banks, right? But T-bills will very closely follow what the Fed rate is. 10 years, 20 years, 30 years is more market dependent. And we have seen it last year. Gosh, it's been almost a year since we got the rate cut, right? We got the last rate cut in 50 basis points in 2024 September. I know we're back in September. But if you see, since that rate cut in September 2024, market rates have actually gone up. Right? Because Fed doesn't control mortgage rates. That's driven by what's happening on 10-year note. And 10-year rates didn't come down. That's driven by the market. So if you want to play on the fixed income side, for your liquidity perspective, maybe stick to a short-term duration bonds, shorter duration fixed income instruments like maybe T-bills or ETFs that track closely to the T-bills. Right? For your yield, you can still get a better yield if you have a longer term duration bonds. But whether generally, if we don't have a fear in the market that US has become fiscally irresponsible and market is willing to uh, treat the long term as equivalent, on the same direction where the Fed fund rate is going, then you would see that the long term bond ETFs prices will start to rise. But that's all dependent on what the market thinks about US or the risk of US fiscal prudence. Okay. But stability short term for the yield, you could still hold long term, but the value could fluctuate depending on what the market is thinking about US. Okay. So that's around rate cut and some of the playbook that you may want to use if you want to play the rate cut. If you don't want to play the rate cut, perfectly fine. If you hold some good businesses in your portfolio, just stick to it. Right? On the equity side, we already talked about PPI that spooked the market earlier. Or was it? I don't. I forgot. Was it on Wednesday or when did the number come out? Because I got too engrossed in looking at 13F filings. I kind of missed out on when this PPI came out. What else? We had a Berkshire Hathaway. Are we gonna talk about Berkshire Hathaway or UNH? But UNH got some decent boost after it was revealed that Berkshire Hathaway has taken a stake in United Healthcare, and the stock was on Friday when the report came out. It's from 250 to almost 300. It gets some decent, I think 12%, 13% boost on the news that Uncle Buffett has now taken a position in United Healthcare. But before we jump onto this, I think his average price is still around 400 or something. So it's not that Buffett made his money on this one. It's just that the news he started buying it. Maybe he started buying it too soon. Who knows? Number two, you should not ape into what Buffett is doing because he have had his own share of mistakes. And you don't know whether this is going to be a good investment or it's going to be bad investment. Only you'll get to know only in hindsight. So you figure out if you want to stay invested in this. Do you understand the sector? Do you understand the company? Do you understand how this makes money? I'm not, I won't be following this for the reasons that I talked about earlier when we looked at UNH as an investment thesis. And I told you, I just don't understand all around this insurance and healthcare stuff. I will still stick to healthcare as a ETF and don't want to take an individual position in UNH. But that's just me. If you understand insurance sector and the healthcare and what's UNH's individual moat, go ahead. I've not spent enough time to educate myself on United Healthcare. But I think the Twitter blew up or X blew up after this news came out, and everyone is now coming out as a genius on somebody bought a calls on UNH, and now those calls are worth whatever, 5x, 10x. Sure, you got a lottery ticket. So that was one big news. The other one is around on Friday. We're gonna have a Trump Putin. These two friends slash foes, call whatever you want to. They met in Alaska. I think it was 3 or 4 hour long meeting, and we don't know what's come out of it. It is basically to discuss the status of war in Ukraine. I don't want to get into the political side of it. That's not what we are here for. But if we are able to broker peace in this one, then it should be generally good for overall economy of around the world, right? Oil prices might get impacted because of it, because now we will have little more oil coming onto the market. So if you are an oil trader or oil investor, something you probably are already on top of it, right? But I think on a long-term basis, it's less wars, less conflicts in the world is always good for economies. So I think that's what I'm focused on. Yeah. I see some questions. Kramer got rid of "Don't be a pig." Now just cash in share or cost a letter and let this ride on their money. I don't know which stock were you talking about. Do you react on political headlines? No, I want to stay away from it because there's no good has come out of it in having any discussion on any politics, right? So it's best to stay away from it. Dave is asking, so should I get out of UNH now while it is break even? I'm in 300 a few months back. I don't know, Dave, what was your thesis to get in UNH? I mean, you'll have to answer for yourself. Do you understand the company? Do you understand the business? Or if you got in just as a trade and you think your trade has worked out, and you want to get out of it, fine. So that's how I will decide if when I might take some position as when the market give me opportunities. I will talk about one of them today, and I'll sell that when when it when the trade has worked out, right? And then I won't worry about that. It'll go and become another 2x, 3x beyond that. So if I were in your shoes and if I did UNH for a specific reason and now that reason has worked out, then I will go out. But if you did it as a part of your long-term thesis or investment and you don't see any change in the business based on whatever this has happened, and if you think, hey, this has already just run up too high for no reason, and you want to sell a call spread to reduce little delta on that one, go ahead. Unfortunately, I cannot answer for you because I don't know, right? Why did you even get in? Sherwin is
Okay.
asking. Yeah, go ahead.
Maybe 3 or 4 years ago, I asked you what Kramer meant. Don't be a pig, and then you said, it's just one of those. I don't. I
Yeah,
can't.
so
So now he just says, get your cost basis out and let it ride.
so there's a saying in the market, it says bulls make market. Oh, sorry, bulls make money, bears make money, and pig gets slaughtered. So if you are a bear, there are a place that you can do. And I don't know what's the origin of it, what exactly that means, but then you'll see you'll hear this. This is very famous saying that bulls make money in the market, bears make money, and the pigs get slaughtered. uh, ELV and MOH for UNH sympathy plays. What is ELV? That's a new ticker. I know. Oh, this must be Elevance Health. I've never traded on it. Wow, almost the same chart. You can again. I think this could be another healthcare slash insurance company, and MOH. Have no idea. Again, I think at the end of the day, you should look at: do you understand this company? Do you understand the business? Or before you even take any position in it, right? There will be a lot of companies who will make moves based on what others have done. It's a MOH, it's $41 billion revenue. It's not a small company though, but and it's growing nicely year over year. It's a mid-teens growth.
Yeah, like UNH is fairly.
Looking at yeah, just like other insurance companies, the margins are low, but I think that's how the insurance business is. Again, I don't have much in understand this space really well, especially the payment stuff, and it's a lot of dependency on government. I'm not saying Molina Healthcare, but UNH is dependent on a lot of payments for the Medicare and all that stuff. Same is was the case with Humana and others, and too much uncertainty for me to invest in an individual company. I,
Yes.
so I stick to XLV, and my XLV short put got closed because of this huge move up. And I'm like, the wall has kicked in. Maybe on Monday, probably I'll look at another short put on XLV. But this is my what third trade on XLV. Short put. So I'm building positions because the healthcare, if you compare with respect to S&P, look at a ratio of, I think last week we looked at ratio of SPY versus XLV. It is like 25 years low. Whereas the amount of money that is being spent in healthcare segment as a whole is still 17%. That has not gone down. But the market has not, like, market is considered that healthcare sector is like given up for dead. That's the reason why I've basically been selling puts on XLV, and so far it has worked out and continue to sell a put. This one got auto closed on Friday morning. I heard a ding, and like, what happened? And I looked, open Thinkorswim, and because my phone, I got an SMS saying a trade got closed. So
Yeah,
We'll
so
do it again.
it's in the same industry, the MOH and ELV. It just that UNH is the market leader. And
Yeah.
not only that, I think UNH has some troubles. I guess they were
Oh,
being
yeah.
investigated or something.
I think market knows about all the troubles. Always the question is, have you been punished more than what your troubles
Yeah.
probably are worth for? It's always between the expectations and what the reality could be. And given where the UNH is down like two-thirds of its market cap, someone is already thinking, no, hey, is it too much? I don't know. I don't know. I mean, I know what is ailing UNH, but it's our healthcare space is so convoluted that I don't think I want to spend time in trying to understand this. That's why I'm just trying to stick to XLV.
Yeah.
That's just me. If there's anyone who is probably from this industry and know this, more power to you. UNS short-term traders out now, long-term hold it. The Sri Jose, their margins getting compressed, revenue staying consistent. Where's the growth gonna come from? So when government is a big player, government already also has a cap on how much you can make, right? So that basically start to the growth in EPS will come from cutting the cost. The revenue may not grow, but you can use whatever AI and throw some little more sprinklers, the new buzzwords, and you can cut down your cost, or you continue to buy back the shares. So your share price could still benefit from that. There are many companies which are like mature companies, don't grow much, but they generate so much of a cash flow. I'm not saying UNH or these are, but they have so much cash that they can continue to buy back their shares, and you'll benefit from capital appreciation. Right? You always don't necessarily need growth. You're getting growth, great, but companies do mature. Apple have had no growth. Look at an Apple, like 4% growth, but Apple is a big buyer of doing a big buybacks, almost $700 billion buybacks, somewhere around that range, right? So look at Apple growth. It's been it was negative in 2019, 5%, but this was the COVID, then 7%, and it's been like 2% and all that stuff. But it generates so much of cash flow, and it keep buying back the shares, and it's also, does Apple give dividend? Maybe very small if it does. It does. I mean, dollar shares, but you'll still get.
Vivek, you mentioned Buffett's average price of United Healthcare acquisition was around 400. Where can you see that information?
I think one of these 13F aggregators showed it. Someone has posted a screenshot on Twitter of that. So I don't recall which aggregator had that information.
Okay, no worries. Yeah, I was just wondering if I was missing something, like if there's not only for UNH, but other stock potential investments in the future, if there's a easy way to spot what sort of prices they're buying.
I don't think I have information. So
sure,
not from myself.
No. Thank you.
All right. Yeah, Anupama says Apple bought 600 billion. Yeah, so maybe I was off by $100 billion. But what does matter? Like Apple is a $2 trillion company, 100 billion here or there, it's okay. Yeah, so you not necessary. Look, growth is not necessary for stock price to do better. I would love my companies to be a growth companies, but companies do mature. It's just like humans, right? You mature, you stop doing jumping around. You can jump around a lot and run a lot when you are younger, and as you grow old, things slow down. What else I see in a chip market? In equity side, we have an activist player. Probably the activist player with the deepest pockets in the world, which is US government is now doing a kind of an activist role. We saw The first step was asking Nvidia and AMD to forego 15% of their sales to China. And I think both Jensen and Lisa would have thought, man, 85% is better than zero. So yeah, we'll agree to it. But I have not seen a government doing this stuff. So this is something new from this administration.
Vivek,
Yeah.
I think what Trump, well, at least they want to get some money from this because
Yeah, sure.
if you do taxes, they're not going to earn any money.
Yeah, so they are trying to figure out every way they can get more money into the coffers of government, right? But my only worry is, is it going to set a precedent? Government has taken some these measures when the economy is doing bad, or government took a stake in a lot of companies during 2008 financial crisis, and then it made money when the market recovered, that those stocks became valuable, it sold off. But right now we are not in any of those crises. But now this, someone could also call this as a, depending on which side of the aisle you are, someone could call it as a blackmailing the companies, saying you pay me off if you want to do business. Where does this stop? Is it only for this one, or could this get extended to other companies which are also selling in China, right? We have no idea. But now we have a government or administration which is a little more active in in using its power. And I'm not saying it is like they want to get more money into treasury so that we don't we have a $37 trillion of debt. So we need every penny that government can get, so that we have to borrow less. But like Bobby used the right? Is it extortion? Is it going to stop here? Is it going to continue? So I'm a little more worried about the precedent that it might set rather than just this specific issue. Right? Number two, now we got a same thing with the Intel. All right, we're gonna government. Obviously, Donald Trump criticized Louboutin, saying he's got a ties with China. Oh, ties with China. Louboutin, he went to White House, kissed the ring, and he had some good things to say about Louboutin. And now they're saying government might take stake in Intel. Is government gonna decide which companies in the chip sector should survive? I mean, I'm happy that they're taking stake, but is it going to only stay in this industry? Or now the government is going to say, let me look at other strategically important industry and make sure those companies don't fail. How about Boeing? I'm looking at you, Boeing. You haven't done anything great in last 5 years. Stock has started to recover just now, but if Boeing had its own shares of problems, you guys are already all aware of it. Will now government say that we want to have a stake in Boeing? Will government having stake in Intel? Now will the administration, obviously, probably they may not say directly, but who knows? This administration has done a lot of stuff which prior ones have not done. They might just sell some of the US companies and you have to buy chip from Intel. Now because we are a partner in Intel. Capitalism should be should be left, businesses should be left best with private players. I understand why we need Intel. If you recall, I do have a little bit share of Intel that I hold. Only reason was it is strategically important for us. It is the only US company that has got some expertise in making chips. Otherwise, we are 100% dependent on TSMC or Samsung. Both are foreign companies. And TSMC majority is in Taiwan. They're building fabs in US. And we're talking about, it's a island separated by 50 miles from China and has got a lot of seismic activities going around. And now we are planning to, become the best in AI and continue our technological advancements. We will need better and more sophisticated chips. So it makes sense to have this capacity or this capability on our own shores, whether it's through TSMC, and TSMC doesn't have the plans, they don't make the latest chips. Those are older generations. Okay, I'm gonna take stake in Intel and make sure that Intel somehow survive. But this administration has become more of a corporate activist player, taking stakes in different companies. Right? Who knows where it's gonna, where will it stop? Right? But just prior to this, and I think I had this in my last 2 or 3 week document, but we will never were able to get to that. Libutan had actually sent a memo to the Intel employees, and if you look at it, it seemed to be a very dire situation. Because they did not see much traction on their foundry business. Most of the work that they were doing still was for internal consumption, and that's the reason why they were saying, we're not gonna we'll build and they'll come. So they stopped their couple of projects in Germany and Poland. They're going to consolidate their operation in Costa Rica, slowing down the construction in Ohio because they did not see the demand what they thought will come from customers for the chips that they're manufacturing. Right? Now only they're ramping these 18A and 18A power nodes only for Intel's own consumption. But that wasn't the plan. You're not going to spend $60 billion, whatever, $100 billion just for Intel's own consumption, which they are losing ground. On GPU sides, they are losing ground to NVIDIA. On CPU side, they are losing ground to AMD. So it's a very tough situation. And then you're making billions of dollars of investment to support the company whose products are losing the market share. Doesn't make sense. And they already made a statement that the 14A node will be based on customer commitment, so we're not gonna do this. So when I read through the memo, I'm like, that situation is very bad. 20 years down the line, we may not have an Intel exist as a company in US, which will be very sad. And it's an engineering, the one of the great engineering company, something that we can all look back as an American and say, we had this semiconductor revolution was ushered in by Intel, right? The PC revolution, the Wintel combination. And not surprised that the government is coming in to save this. But I hope it's only is limited till the strategic sector. I hope government is not going to take a stake in some grocery company or some let's say General Mills saying you're putting too much sugar in this or high fructose stuff, we want to get real sugar, so government is going to take a stake in the company or in a beverage company. I hope we don't do that, but I'm not betting against it. Let's put it that way. So Adepa was saying export bill was lenient with policies stating few quantities. Yeah, H200 on the other side, China is saying that H200 probably has a backdoor, so don't buy NVIDIA chips. It's strategically for security purposes. China is telling its companies to not buy NVIDIA chips. So we have an interesting situation around how much will be the demand for NVIDIA chips is if the Chinese government is encouraging the businesses in China to basically focus and get Huawei chips, okay? The Ascend chips. So it is a few maybe years behind NVIDIA, but if you can get 80% of what you need at 20% of cost, then do you necessarily need the latest chips? That's the decisions I think companies have to make. So I'll skip the Jane Street and the Dalal Street stuff, but it's an interesting one. If you're investing in Indian market or if you're keeping tab on Indian market, there was a lot of interesting stuff happened with the Jane Street. So, but I'll skip it. I don't know how many people are interested to know about what they did. But that woke up the regulators, and then they had to fine Jane Street and all that stuff. Looking at fear and greed index, oops, this should be 16. No, 15. So we are still in a greed mode, and over the years, at least for last 5 years, I've been looking at this. For me, it's a good contrarian play. If it is in a greed or extreme greed, yeah, relax. Don't get into FOMO. Wait, and or keep some cash on the sidelines. When it's moved to fear and extreme fear, that's the point when I would love to come, deploy cash or sell a lot more short puts. I mean, selling short puts is better because the IV is also elevated when the market falls down, and you can get at a much cheaper price. So yeah, from that perspective, I'll still taking slow. I'm not adding any more deltas, and because the market this week, I mean, it had gone higher, I lost a little bit more deltas. Sorry for those who don't understand the term, but there are many of you who have been doing options, so for those they'll probably get it. So I've not added any deltas. Lost delta this week. I'm like, okay, I'll wait. Right? It's an opportunity call that I might lose if market continues to rip higher. I may not perform again, it depends on individual stocks, but so far life and portfolio has been pretty good. Handsomely beat on the market. I don't have to be too greedy. So I'll wait. I'll wait for market to get to neutral or to the fear to add some more deltas to portfolio. Sector performance, we're close to 10%, 9.66%. We are in 8th month of the year. And if you look at from April dip, we were down 20% to now up 10%. So it was 4th April. Now we are in 16th August. What? 4 months? 4 months have been crazy. It's crazy to see how much the stock market moved in these 4 months. From 475, 480 was the bottom. Now we're looking at 650. So we had a new all-time high on Friday. Oh, sorry, this is week. Dips. Hold on, 1 year, 1 day. 480. Well, picture doesn't change. And close to 650. Right? 30% plus. Pretty good run. But pretty good run if we had not sold all the shares here, which I know some people are saying it's too much volatility for me. Or hey, I need to pay my college bill because September is starting, and August new session starts. I need to pay my bill, and April is down. Okay, I'm selling now. That's why. If you need something for next, I would say 2 years, don't keep in the market. At least I don't want to keep in the market. You never know what could happen. And so these were the best opportunity to buy some other stock. And I don't want to be at this point of time. I don't want to be like selling the stock. I want to be buying the stock at this side. Okay. But we have a pretty good run. So 10%. Do I hear 20? How many of you think we can get to 20%? We still got 3.5 months to go. No takers for 20%? You all would love for market to be up 20% for this year? Don't tell me that you don't want market to be up 20%. I think everyone should just keep going up. But it may not be that easy. So I just went back and picked up all the years where the market is down more than 20%. Right? Since 1926. So 27, we got 37%. And then I highlighted based on where we got, a consecutive 2 years of 20%. So 2023, and this is SPY, right? Total return 2023, 2024. And prior to that, where God was 1995, 95, 96, 97, 98, 99. 5 years of consecutively 20% returns in SPY. Don't ask me what happened after after 1999. Right? But we had 5 years of consecutive 20% return. So when someone asks me why even someone, I also think it's too much too soon. All the AI stuff, and we all know that's 1995, 96. All this was fueled by .com. It's gonna change the world. It's gonna change how we live, which eventually happened. It has changed the world. It's changed how we conduct commerce. Internet has changed how we communicate. Internet has changed how we spend. Internet has changed where we make friends. It has changed our lives. But what happened in 2000? So the biggest question that I have for myself, and that's why, you know what, I'm not selling my portfolio, but I'm not going too big. I just want to maintain and control my deltas, is I don't know if I'm in 96 today or I'm sitting in 99 today. If I have a crystal ball which will tell me I'm sitting in 1999, then I should be selling my portfolio and moving to cash. But what if I'm on 1996? It will be extremely, extremely difficult to sell now and then buy it again if the market is another up 20% a year later. You can say, I'll sell now, and if market needs to go rip higher, I'll get back into the market. Saying is easy, doing is extremely tough, almost impossible. There are very few individual investors, or if for that matter, even the fund managers who have mental capacity to sell at 100 and then buy the same stuff at 200 or 150. I have had tough times in doing it. It's not easy. So yeah, that's the reason I'm not selling. But I think if I go back and look at it, there's been only one time in the history of the market that we have had more than 2 consecutive years of 20% gains. So the history is stacked against us. It has happened only once, which was during the .com bubble. 1950s, 50, 51, and then we had a gap of 52, 53. There was a bear market in 52, 53. And this is where recovering from the bear market in 1954, market was up like 50%. Otherwise, max was 2%. Sorry, max was 2 years, not 2%. Max is 2 years consecutively. So if we get 2025, if we make 20%, that's going to be only second time in the history that we had 3 consecutive 20%. Yeah, Shri, go ahead.
Yeah, for the S&P 500 to be greater than 20% from the beginning of the year, it has to reach 7,041 on the SPX, 7,041.
That's almost too far away.
So I just wanted to give you an information how much it has to go up before you can expect it is 20%.
Yeah. Ain't gonna happen that much. So we started here somewhere here, right? 580. So yeah.
It's about 700 on the S&P 500.
Sorry?
On S&P 500, it is around 700. SPY has to reach 700,
Yes. It is, let me put it this way. It is very, very, very difficult, but I've stopped using the word impossible.
I didn't say it was impossible.
Exactly. I think all the targets that I hear, again, don't put too much faith on targets, but the people who claim to be a lot more knowledgeable have a lot more information and data than us retail investors. The targets that I have seen highest is, I think, around 660, 6,600, or maybe 6,700. I think that's the max. Right. My guessing is SPY is a wrong comparable, should compare against growth indices like QQQ. The reason I do SPY is little more, has got a little more inclusive. It's got 500 companies in it. QQQ a lot more tech heavy. And that's the reason I pick up SPY, because SPY is generally considered as a bellwether. You can, if you want to pick any individual other indexes, yeah, the numbers could be all different. But SPY is considered as a barometer. We have a lot more historical data and a lot more studies on SPY than others. But QQQ also crashed. I think Nasdaq crashed 80% after in 2000 crash, and I think SPY was down maybe 30 or 40%.
So the QQQ has to reach 616.
For again, I don't know if you, in terms of a QQ, I don't have the numbers for QQQ. So
yeah, I'm just giving you the information.
Okay. Cool. All right. What's the buys and the sells? I did have a buy. Geez, I forgot to update. I had a short put assigned on, or was it last week? I had one short put assigned on India. I think it is probably this Monday. Again, this is not a recommendation, but from transparency perspective, no, it was this week. So I had a short put on India ETF, and based on all the back and forth that US government is having with the Indian government around tariff, 25% tariff, 50% tariff, so the Indian ETF stocks got sold off, and I was assigned a short put. I'll hold it. Happy to buy it at a lower price. Probably will start selling covered calls later. Other one is this week. Today, took an assignment on a covered call because I've had a good run up in 3 months. This is a e-com retailer largely operating in African countries, and I bought it at $2.81. And then I came and talked about it. That I just took a position. This was opportunistic because I thought that was too much. Market had punished the stock more than I deserved. When I looked into the earnings and went through the earning transcript, I didn't think that it needed that much of a punishment, so I did buy it at 281. It added to I already hold this in my position, so that was additional just to take advantage of the market tantrum. Thesis worked out. Now the stock is, I think, and then I sold a covered call recently against it, which is now in the money. So I'm like, okay, let some of the shares get taken out. I have one more from this lot, 281, which is at a $6 expiration for September. And if that happens, I'll let it go at $6, and I will enjoy the further ride with the remaining long position that I still hold in this stock. So that was one. Jumia. Other one was Doximity. Well, Jumia after this, it also reported results recently, and it was up like 30%, and then was up another 13%, then up another 6%. So yeah, now I think it's too much. The results were good, but not that great, right? So I'm okay. Let it be called away at 6 by September. I'll be fine with it. But if I'm proven wrong in terms of the stock price movements, which could be possible very easily, because stock price movement is based on the mood and the momentum, which I don't know. Market could suddenly get positive around it and would want to buy the stock at 10, 12. Who cares? Yeah, I'll be a happy shareholder. I won't be complaining about this share that I sold. The second one that got sold was Doximity. I had a caller around it when Doximity had announced the results for our earnings side. And then yesterday morning, I put a note saying that I need to close the position, before market closes. Then I forgot about it. I went to make lunch and then it missed my mind. So when I came back, which was after market close, I'm like, oh, I have a docs, and I think 65 was the short put, and it closed just above 65, 65.13. So anyway, that shares will get called away, and I will probably sell a short put on Monday to try to get back into this. And if I get assigned, I'll happily take that assignment. So those are the only two stock movements for this week. Nothing else. Earnings next week. Which are the ones that we have a cybersecurity, and then we have a Home Depot, which could move a little bit of market. Then we got a Chinese company, Xpeng. No, not much. So I guess so next week is going to be light, and we are almost, I think, 90% plus companies have already reported. So very few remaining. The biggest one is still remaining, and I think that's gonna report probably week after next, which is the Nvidia. I don't know why. They should just change it, should report it when the rest of the big tech report the earnings, but Nvidia generally reports it very late. So we'll wait. That could be another one which will could move the markets by a lot. But light week for me next week. So I will probably spend time in catching up with the earnings transcript of, I think I've not read, at least I have 5 or 6 earnings transcript that I still need to catch up. I'll spend time next week on that. I thought I'll spend time this week, but this week I got too busy around 13F stuff, so didn't do much. Next week I'll probably catch up on the earning transcript. What else? Which ones you're focusing on for this one or for this week? Anyone have a big position on any of these stocks? Like, my God, my heart is beating much faster because this week is huge for me. Chintan says Estee Lauder and Workday. It's like a big position, or like, yeah, I mean, I hold only one. Oh no, I have a Baidu as well, but those are like a small positions. It's not gonna.
I have a position on Estee Lauder, so I'll be watching that to see
Okay.
if China consumer recovery. And then Workday, because SaaS is getting hit recently. Everyone's thinking AI will hurt SaaS.
Yeah.
So let's see how Workday reacts to earnings.
Yeah, so Estee Lauder, I think it's also dependent on the China recovery, what happens in China. You're right, Workday and a lot of other SaaS companies are now, we're questioning the business model of pricing, seed-based pricing, right? How do you move from a seed-based pricing where you charge the companies based on how many employees they have? Because now you'll have an agents who are probably doing the work. So you don't have any more employees. So how do you, I think, so that's the question that I think the street is asking is, number one, do we even need those companies, or I think we still need those companies, but the pricing model has to change. SaaS model has worked wonderful for last 20 years, but I think now each of these companies may have to pivot and see how they can make their pricing work in the world where there are agents who are coming and grabbing data from your website or interacting on your website, not the end users. Something they should do as a consumption-based pricing, like many of these hyperscalers have moved on to. Right? Some pricing exists based on how many queries you have written on the database, how many data you're extracting, right? So rather than a seat-based pricing, eventually we will move to consumption-based pricing. Right? So, but that will be a big change. I'm seeing this change on the cloud computing side, but I guess needs to happen on every other SaaS company as well.
So CRM kind of tried that consumption-based pricing, and they got huge bills using their AI chatbot that they have. So then they stopped it and they went back to seat-based. So we'll see how it goes.
Yeah. So now there are questions of if I think Palantir has told that by 2030 or whatever, by next 10 years they're gonna 10 times the revenue and will have 25% less people. And a lot of companies will be looking at you have an agent as your co-worker rather than a human. So in that case, how will your seat-based pricing work? I think that's a concern that market is having. But markets also overreact on short-term basis. Looking at a crypto market, this is the screenshot as of today morning. Don't see anything which is concern to me or super exciting to me based on last 2-3 or last 2 weeks. So just chugging along, right? Unless you have a question on it. Bitcoin had hit all-time new high at I think 124K. And then when Scott Bessent came and told, oh, US government won't be buying any more Bitcoins, but we will be building up a reserve, whatever we have confiscated. And in future, whatever we will confiscate, market sold off. Then on Twitter, I saw clarification saying, no, that's not what we mean to say. We will always hold it, but we will also look at budget neutral policies because that's what David Sachs had told to the media earlier that government will be looking at a budget neutral ways to add Bitcoin to the strategic Bitcoin reserve. And then Scott Bessent came and told something different. Then he had to issue clarification, whatever. Who cares? What's happening in next 1 week, 2 weeks, etc. This is a really, really long-term play. So, but I'm happy that's staying range bound because IBIT has been minting money. It's a decent vol, decent premium on IBIT. If you look at IBIT and going out 34 days, right? Add the money, you can still get it 2.73 midpoint, 2.73 on 66, right? So that's 4% for 34 days. Not bad. If you want to play on the both sides of the market, means if you hold IBIT and sorry, if you I'm playing only one side of the market, right? I just want to sell a short put against it. Still, if it falls down, I'm okay to buy it. I bought it at 4% less. Or if it continues to go higher, I at least made 4% in 34 days, right? Not bad. So I'm playing both sides. I have like 4 strangles on IBIT. I think 2 of them got closed because those were like at a 70 and 71 when it fell down. They hit the profit target, that got closed. So I'll probably start another set of IBIT strangles next week. What else on the crypto side? Ethereum, we talked about it last week that Ethereum went up like past 4,000. It is still not hit its previous all-time high, right? Which it had achieved in November 2021, around $4,800. So not there yet. While Bitcoin has made a new all-time highs, Ethereum still hasn't crossed its previous all-time high. But we are seeing some demand shock coming from Ethereum. And I do want to read a quick summary that I put together based on the note that I saw from Bitwise, which is an crypto ETF issuer. Their chief investment officer wrote a memo around Ethereum demand shock. So just want to go through that and share why we saw Ethereum I think also had a better run up than Bitcoin in a short term. If you look at Ethereum run up from May onwards, from 17, ETH is a ETF from close to 17 bucks now to 43. That's a huge run up. So let's look into what could have been a reason for it, right? So Bitcoin, since in Jan 2024, Bitcoin ETPs were approved. And then, government and a lot of companies, the biggest one is the MicroStrategy. They've been buying Bitcoins, whereas you cannot produce more Bitcoin. You cannot suddenly increase the supply of a Bitcoin if there is a more demand. And that's the whole proposition or value proposition of Bitcoin is you just can't create it. Gold, you can go dig deeper. If the gold prices goes to $10,000, a lot of mining companies will be able to invest in bring more gold from earth crust. Right? Today we don't do it because it's not profitable to do it. And fortunately, for the Bitcoin ecosystem, you just can't create Bitcoin. Doesn't matter where the price is, you just can't create it more. So Bitcoin blockchain produced only 300,000 Bitcoins, whereas the demand was for 1.5 million, and prices kept continue to go high. Right? It's in the short term, it's all about supply and demand. Now Ethereum, it was launched almost 10 months after the Bitcoin, but the Ethereum ETPs bought only 660K. But no public companies adding into Ethereum, but the Ethereum network produced 543K. So the demand was almost equivalent to what the production of Ethereum was. So it's kind of a wash, right? And then we saw that it diverged from a pricing perspective, Bitcoin and Ethereum. What now we start to see since May, a lot of demand coming from Ethereum spot ETFs, suddenly companies becoming Ethereum treasury companies. Some have a real interest in becoming treasury company. There are many who just want to give a boost to their share price and moving from a completely unrelated current business to just announcing we're raising funds to buy Ethereum on our balance sheet. Okay, without getting into the merits of what's right or wrong, the end result is still the same, that the more companies are ending up buying Ethereum, or at least they are claiming that they want to buy Ethereum for their balance sheet. Means the demand coming from these Ethereum treasury companies. That's one. Then of course we'll talk about the stable coin and all that stuff. So here's some of the companies that have already committing, saying how much money they want to raise to buy Ethereum. Right? We got a Bitmain immersion, and the biggest mouthpiece of this is Tom Lee of Fundstrat Global. If you watch CNBC, then you cannot miss this guy. Or if you're on YouTube, you cannot miss this guy. So he's been coming and talking about Ethereum, and he's a chairman of Bitmain. We had a Sharpling Gaming company backed by one of Ethereum co-founders. Then we had a Fundamental Global, is a fintech company. They secured $200 million private placement and gonna do a $5 billion shelf offering to buy Ethereum. What surprised me is this life sciences company, right? It's all deja vu. Every time we see a trend, companies which have been unrelated to the business will come in, plain and simple. 2021, NFTs were the rage. new coins, old coins were the rage. We had NFL creating their NBA short. Sorry, was it NBA short? So I would say NBA creating tying up with the crypto companies to create NFTs called NBA shorts. We have a codec to create a codec coin. We had one of these luxury companies, I think it was Tiffany, creating a store in metaverse. Things happen. Well, whenever there's an interest, you will see a lot of these companies. 2017, blockchain was a new tech, just like .com was in 1996. Everything was blockchain. I saw a lot of a tea company, iced tea company, changing its name to Long Island Long Island blockchain, from Long Island iced tea to Long Island blockchain, and the stock price was up like 400%. So I'm not surprised to see some life sciences company, to see some, I don't know, any unrelated businesses coming and announcing that we're going to raise funds to buy Ethereum, and the market is going to just shoot up their share prices by a lot more than the amount of a debt that they are incurring to buy the Ethereum, right? And as long as markets stay crazy like this, expect more companies to come to the market and do these offerings. Right? We had a Mill City Ventures. I've seen some real estate company doing the same stuff. Bit Digital, BTCS. Okay, that makes sense. Game Square Holding, it's a gaming company. And then in Japan, there are some restaurant company which is doing the similar thing, right? Ether Machines, this was a dynamics. This is again coming through SPAC. At the end of a day, I think if the price continues to go higher, and if the market continues to push the stock prices of these Ethereum treasury companies way more, is giving a lot more multiple to the amount of Ethereum that they have on their balance sheet, these companies will do it, all day long. That's what Michael Saylor has been doing it for years, because the micro strategy or strategy stock trades at a multiple of the Bitcoin net asset value that they hold on their balance sheet. Michael Saylor has figured out a playbook of how to juice the volatility of a Bitcoin, or create financial engineering products to give exposure to what those investors want. Will all these companies be able to do it? I have no idea. But when the sun is hot, make hay while the sun shines. Now since May, they've combined, all these companies combined bought or committed to buy like more than 2 million ETH, whereas it's like 30 times more than the supply. So no wonder that now the pricing is try to catch up. Still, it is way less than how much the Bitcoin has caught up. So a lot more upside seems to be that there is a lot more upside, because investors are still underweight on Ethereum. ETH market cap, when I say ETH market cap, we are referring to this market cap, which is $532 billion versus $2.3 trillion, right? It's almost 20% of Bitcoin, but when you compare the assets under these ETH exchange traded products, right? ETH, ETHA, there are a few others. That's only 12% under what is under Bitcoin. But a good stat is, imagine there was no Bitcoin ETFs, right? They were never approved. In that world, Ethereum ETFs is the most successful ETFs in the history of ETFs. the world has changed so much that now the two crypto ETFs have become the most successful ETFs, right? And now we got a lot of more excitement around stable coin. We had a Genius Act that was now been signed into law. Now JP Morgan is saying that we're gonna participate in stable coin. With Jamie Dimon had been a long time he's been against all these crypto assets, but when there's a money to be made, yeah, sure, I'll join the party, right? Traditional banks are getting into this, and we're talking about real world asset tokenization, with Larry Fink of BlackRock shouting from the rooftops. So, and most of these projects are on Ethereum. There are others as well, don't get me wrong. 70% of the stable coins are issued on Ethereum. There are probably a little more than 70%. There are some on other blockchains also, like in Africa. And, I would say under like the countries which are even lower than the developing ones, Tron is very famous, like Justin Sun. Tron, right? The stable coin issued on Tron blockchain are very famous, are heavily used. In a Western world or in Europe, Ethereum is more famous. So there are many other chains on which you can issue these stable coins, but 70 to 80% of the market is Ethereum. And same is the case on tokenization. And that's another excitement. Someone had a question around what's the story. This is the story. We passed the Stablecoin Act, which gives a clear-cut regulations around how companies can come and issue stablecoin. And we could do it on Solana, but Solana has gone down 6 or 7 times in the last 4 years. Ethereum never had a downtime in its 10 years of history. So if the Wall Street want to build something and want to build a stable coin or want to tokenize the real world assets, Wall Street love tokenization, right? Because they can make a lot more money in fiat. The question is which blockchain they're gonna choose, right? So that's what the bullish thesis around Ethereum is, and the fact that it's still not. We have treasury companies just coming in, and it hasn't hit its previous all-time high. That's what I think is a bullish thesis for now. So we see some target prices coming in. Stand chart, they had their end of year target price of 4,000. Now they upped it to 7,500. And then by end of 2028, $25,000. Again, guys, don't just go and buy because Stand chart is saying it's going to be $25,000. I'll give you other side of this also. Right? Tom Lee, right? Tom Lee say that it could be $15,000 to $20,000. Right? JP Morgan says Ethereum is poised for a meteoric growth, probably particularly from stable coins. Goldman Sachs have the same stuff. Finder.com panel of 50 fintech specialists are saying it could climb the Ethereum by end of 2025 is 6105, and then will climb to 14,260. I love how precise these numbers are. I think
Vivek, do you believe in this number?
No. So I was just about to say, I think I don't pay much credit to the number, but I do think, again, if you want to play in this sector, ever since we've been doing this meetup, right, since 2020, I said 20-year time horizon. We've been only 5 years in this. I still have to see for another 15 years, right? These life-changing technologies, you don't make big money by engaging in a short-term trading if it is a life-changing stuff. Right? Those who got into internet stocks in 1995, 96 didn't make much money. As compared to those who have held their Amazon from 2000 or all the way. Or if you got into Amazon in 2000 and sold off in 5 years saying, okay, the story is done. Internet is done. It's over. All that we wanted to do in internet, we've already done by 2005, because 2000 we had everything.com, and 5 years the story is done. If it is life changing, these things move slowly. Even though day-to-day basis, there's a lot of news, we think, oh, so many things happening. I think I'm still holding on to my 20-year cycle, saying it's not for me, probably it's for next generation, if it is going to create a life-changing, the way we will conduct, and also the life, and corresponding to that, the life-changing wealth, if it has to be much bigger. So I don't pay attention to these numbers for 2025. Neither should you, because I've seen these numbers earlier also. So 2021, same Tom Lee, same fund strat. The target end price was $12,000 to $15,000. When the prices go high, you will see Wall Street firms coming with these ridiculous price targets. Morgan Stanley has a price target of like 15,000 by 2025, right? 2021, another panel had like 17,000. So don't pay attention to the pricing. But I think with these regulations, and it is still a lot more room to grow. Whether is the price going to be, I won't be, I mean, it could go down to 3,000. Who knows what will happen in a short period of time? What if you have a blow up? What if strategy has a blow up? It will bring down the prices of all the crypto assets. We don't know. But I think what I'm observing as the shift, which is more around the technology or the usage of stable coin, or if the tokenization become real, we're starting to look at banks are saying, they will allow their customers to buy these crypto assets. Right? And you should look at the adoption figures, focus on those metrics rather than the pricing. And please don't pay any attention or pay much heed to the price targets from Wall Street. If you've been in the field enough, whether it's a traditional finance or a crypto, we have seen all these targets. Every bull run, Wall Street firm will come up and try to outdo each other by giving more and more ridiculous price targets. But I think I'm still bullish on overall ecosystem. Haven't given me any reason to be concerned about it. And I'm only 5 years into this 20-year game. So a lot more rounds to be played on this one. Ravi has requested, can you please cover DoorDash as a company, market cap, CEO? Cool. From a next time onwards, so Ravi, I wanted to talk anyway. So I'll take a note of it. Maybe once in a month, 1 week in a month, I'll do these deep dives. So let me know maybe we can keep the last week of the month. So, so for this week or for this month, we're going to do DoorDash.
Thanks, Vivek. Thank you.
I took a note of it. I'll raise the bar for the next request for September. And maybe next meeting, I'll tell you what other additional information you have to give me for me to go and look for that company. So till date, I've asked for 2 things, market cap and the CEO. I'll probably want to add some more information. Pankaj is asking, what about alts? Is it worth a buy? Is it ALTS is the stock, or are you talking about the altcoins? Let me.
No, I think this is Alt5 Sigma.
What does this company do?
Recently.
It's the algo company?
No, this is Eric Trump, and Eric Trump is recently joined hand with Steve Witkoff's son, I think Jack Witkoff.
So this is a OTC firm. Yeah. It's basically create a product for it's a kind of fintech company which creates a product for trading, etc.
Right? Correct. And they are heavily invested into this Trump family and Witkoff family.
Yeah, I mean, I never have I generally don't buy a company based on what their connections, etc. And a lot of Tesla investors learned their lesson. All those connections are based on how much, what I can extract from the other party. Today, they are well connected with Trump. Tomorrow, who knows? Looking at this, I have no interest in investing this company.
Okay.
There is another one, Trump media.
Do you really want to go there?
No. I don't want to. I'm just saying, like,
Oh, yeah.
Trump has started maybe, getting extra money and,
Yeah.
park it in that company or something like that.
Again, I'm not commenting it. So it's what, $22 million revenue? You're right now investing in a kid who's like born a week ago, right? I don't know. Maybe it has potential. Maybe it'll not. Maybe it'll never pass the high school. I want to invest in maybe a kid who probably will go to, So today I was thinking around analogy, right? And I think I've given it earlier also. Investing in company, when we buy a share of a company, all we are buying is a claim on the future cash flows of the company, right? Or what the company's business is going to perform. So it is coming to the real world. If you think in that way, it is I'm investing or buying a claim on a kid's future earning potential, right? You could now, the earlier you invest, the claims are available at much cheaper price. So if you invest in a kid who is just born, their parents will say, you know what, I can give you 10%, you can buy 10% claim on all his future earnings at a very cheaper price. As the kid grows, the price of of the claim on the kid's future salaries is going to grow. That's why you have to also think about companies. Maybe this kid, whatever, odd 5, will go to Harvard. No, I think Harvard is a bad name to nowadays to talk about. Pick another college, any other Ivy League college, like MIT. He's an MIT worth kid. But he's just born. There's nothing to show for it. I don't know. Maybe he'll not even pass high school. Who knows? So if I were to stake a claim on his future earnings at this point of a time, maybe I'll put very little of my wealth because there's too much risk. Oh no, this kid might get hurt while playing football. Might get a concussion. Who knows? This sort of uncertainty. If he's in high school, or if the kid is in a middle school, that's where you start looking at a growth companies. Okay, clear the elementary, clear the startup area. Now he's got already shown we are seeing some little more, been doing some good grades in a high growth stage. Maybe I'll be a little more confident to buy. Those are the growth investors, right? Comes to the high school is where we're saying, okay, now we know I got a little more certainty. This kid is broad worth MIT, maybe we'll go to the state college or state university, which is not bad. Or, well, I think this is only worth community college, so I'm going to pay only this much. You have a little more certainty around it. When you're starting to work, you have a higher potential. When you're just starting to work, if you are in a middle level or like you already reached 30, 40 or between 40, 50, you know how much of the future growth is planned. So pay accordingly. This kid is just born, is a week-old one. Maybe it has a potential, but so this is like a gambling chip. I'm not going to invest in this one right now.
Yeah, that makes sense. Yeah. Thanks, Vivek.
Cool. Vinay's questions were around, okay, the article in Barron's stated that quantum could unravel the Bitcoin algo. Yes. If we can break the algo, the encryption on Bitcoin, and the quantum can break the encryption on Bitcoin, the whole value proposition just falls apart. But also understand that there are quantum resistant encryption algorithms which are already in place. Now, the question is when the Bitcoin community will adopt it, because the Bitcoin moves very, very slow. Right? But if the threat becomes real, I think there's enough, there'll be enough push to basically switch over to quantum resistant algorithms. Right? Now, having said that, if we have a quantum computing breaking these encryption algorithms, Bitcoin is least of my worries and should be least of your worries. Bitcoin is $2 trillion asset. Overall world economy around $400 trillion. Equity around the world is around $100 trillion. I think bonds 150 or $200 trillion. All your e-commerce, all your banking, everything your for social media, everything is at risk. If these encryption algorithms could be broken so easily, I'll have a much bigger worries than what's happening to Bitcoin. So I don't care. Yes, there was I think I've not read the Barron's article, but there was it made a big splash. I think Google researchers told that they are 2 years. They think they can break this sooner than what they were anticipating earlier. But there are ways to get around it, and we'll have a much bigger problem. Can we review Sound? SoundHound is right now it's a meme stock. Let's stay away from it because I don't think you're gonna get much from a SoundHound, right?
Vivek.
It's a $130 million revenue company. Too small. ACN, I think that's Accenture, is down 40% from its all-time high. Highest market cap 273, 165. See your this who like an analysis. Okay, so ACN then we'll keep for September 1. But we know what's happening to ACN. It's like if we can get a lot of stuff done by AI, then why do you need to spend on these consulting companies? But that's at a high level, that's what it is. But it's a ACN or the history, it's one of the better managed businesses than a lot of other IT services or IT outsourcing companies. Yeah, Sam, you were saying, so, okay, so, you put your question. Sorry, I was just finishing these prior questions. What happened to the Circle stock last week? What did Circle? I mean, Circle stock was wherever it was, and I told you I don't understand why the market is giving so much high valuation to it because the business model is pretty easy to understand. You take dollars from those who are buying USDC and invest that in treasuries and corporate bonds, and you make 4%, 4.5%, 5%. Let's say you do corporate bonds 6%. Pretty simple. But then you also have to pay your distributors. Circle pays more. So Coinbase make more money on USDC than the Circle makes it because they pay a huge distribution fee, right? So not much of a, it's a low margin. It's a more adoption game. So I have no idea why the market is like, oh, the IPO, everyone wants to be in a Circle. And we know why it was like companies that want to get exposure to crypto, right? If I'm a fund manager, I'll tell I have exposure to crypto because of what Circle, right? So I don't know why it was down because I was not tracking it, but I think the bigger question is why the heck it went up. That is I'm more concerned about because there is no reason for it to announcing pricing a public offer. Oh, they have a secondary coming in. Okay. All right. So here's the reason. They're diluting the shareholders by doing secondary. And why not? The stock price is absurdly high. And if I'm a CEO of a company, I will take that money because market is crazily offering me the money, which I don't deserve, and I'll take it. Oops. So yeah, that's the reason. Okay, that's the reason why it probably could have gone high because it's of a secondary offering. CoreWeave. Okay, so hold on. Let me just see what else is remaining. We have one earnings, then we're gonna get into super investor moves. CoreWeave. So I still have the same thesis around CoreWeave. It's right now, everyone, because there is so much demand for AI chips, that anyone who has gotten hands on AI chips, NVIDIA AI chips, is now able to basically encash that business. CoreWeave is just doing the same thing. But here's my worry around the CoreWeave and some similar businesses. You have one big supplier, NVIDIA. You have a handful number of customers, hyperscalers and some neoscalers. That's the only two things. You have a highly depreciating asset. You buy the GPUs, NVIDIA come up with the Rubin chips, then suddenly your H200s fall their prices fall down. And if you go back and look at the review that I done for S1, they are very convoluted relationship with some of the debt offerings that they have done. One of their loan debt provider is also has supplied chief strategy officer, has supplied some key leadership people, is also a customer, and the lender is a customer, the lender is HR provider, the lender is also has a venture firm in which CoreWeave has invested in it. Too many complications around it. Today, everyone wants CoreWeave because there's a demand for AI chips. Maybe they change their business model, or maybe if they have a little more cleaner relationships, maybe I'll look at it. But it's a short time play, seems to be a good one because still everyone wants NVIDIA chips. And
Yeah, so Vivek, so I think starting from Monday, whoever like IPO investor, right? Their cycle is gonna open to
the
sell.
lockup is gonna expire on CoreWeave.
Yes.
Yeah, see. So then you should see some of those IPO people selling their.
That's what I see in one of the news, but
yeah, revenue's been growing like crazy, and why not?
yes,
Everyone wants AI, right? It's and we have seen, I think, similar. They're buying another company called Core Scientific, which is a similar business. And then they've been also, okay, this dilution is due to the IPO. And look at the margins, pathetic margins. Because at the end of a day, it's a hardware asset. It's a very prized asset. So 1 year, 2 year, 3 year, this game may play out as long as AI is hot. I'm
correct.
going to invest in CoreWeave thinking that next 10 years, not in CoreWeave, probably there are better AI plays that I can do. I just can't wrap my head around a lot of gotchas that I've seen in CoreWeave and its company. All the head people are all ex-energy traders. No tech folks running the tech-heavy company. They're all traders, guys. All right. So let's continue. One earnings, then we look into super investor moves. Earnings is C Limited. Okay, it posted Q2 results. It was a beat on revenue. It was a huge beat, in fact, on revenue. Revenue was up like 38%. Forget about EPS. EPS was up like 300% plus. Still, there's a little bit of a miss. But then I want to actually focus more on the operating numbers. Operating income was hugely up. Operating cash flow, I think from a financial numbers, all good. All the business metrics look good. E-commerce is up. So for those who don't know about C Limited, it's a, I should have given the intro before I started this, but better late than never. C Limited operates 3 businesses and mostly focused in Southeast Asia, right? Indonesia, it's a Singapore-based company, Singapore, Thailand, that part of the world, and also have recently entered into Brazil. There were 3 businesses. One is the e-commerce business, which is like what Amazon does. The other is the gaming business. So they have a game called Free Fire, Fire Free, which per their claims is one of the most downloaded game in the world, right? And folks in looks like folks in South Asia are crazy about these games. And I do remember that one point of a time, Indian government banned it because like they were trying to look at, that was a time when they banned a lot of Chinese games also. But the popularity and the usage in Southeast Asia has been growing like crazy. Third thing that they operate is called money, which is their financial services side of a business, right? Money transfer, giving capital loans to the merchants, etc. So these are the three businesses. So when you look at an e-commerce revenue up, digital entertainment, which is Garena, their gaming stuff that's up, and digital financial services is also up, right? So they got a $10 billion of a cash position on their balance sheet. It was the highest ever quarterly revenue for them. What I also liked, it's a business that is growing and operating profitably with increasing margin over 6 continuous consecutive quarters. When you're starting your e-commerce, it's not easy to build an e-commerce business. Right? Amazon has told us, Amazon had to operate on losses for many, many, many years before it, and most of the Wall Street had like shunned that stock before it actually became profitable and became a multi-bagger. Right? C Limited, this quarter, and they've actually turned around their business since 2022. They also raised their full year guidance for Garena, which is their gaming stuff, and stock was up like 20%. Other thing which I like about C Limited was I read I think it was a few months ago. So in 2022, when the markets, all these growth stocks had gotten crushed because the Fed started to increase the interest rates. Same thing happened with C Limited. Let's go and look at a little higher number. Right? Same thing happened with C Limited. And everyone wanted to save cost because suddenly the game switched from higher growth to cash flow positive. I don't think I've seen any other company do what C Limited did. So their CEOs and the top leadership, they forego their cash payment. They say, we're not going to take any salary, right? Number two, they also rewrote their stock options because instead of all the stock options that they were getting at 90, they upped the value saying if the value has been something more than $120, etc., something up. So which was a hugely shareholder friendly move that they had done. I think I tweeted about it that point of time. I say I review a lot of companies. I go through the earning transcript and earnings release of many companies. I don't think any company I've seen management, take the drastic step. Some CEOs will say only at a CEO level, I'll say, you know what, I'll forego my salary for a year. But the big whole leadership, I've not seen anyone. So I really like the fact that management is really, really focused that they need to, operate the company profitably. And it's not just by cutting employees. They're also ready to face the same heat as the shareholders are and be in the same boat. Right? So from that perspective, I think I liked it. I increased my position. I still hold the shares. And this one for me was as a happy shareholder, right? The stock did perform well. So that's C Limited. Any C Limited shareholders here?
When I had call option, I sold literally as soon as it started growing with like $50 profit. If I have waited after earning, I could have made more.
Yeah, I think they'll still.
I see that this is a very good company.
Yeah. The company is good. Okay, so so this was the post I did. Let me just share that.
So when did you post this, man?
I think I posted on Twitter. This one I also posted, but I'm not too active on LinkedIn. But I also posted the same thing on Twitter. It's a little difficult to find on Twitter because there's so many things. So this is 2 months ago, right? So they said they'll forego their salaries until the company achieves self-sufficient profitability. They canceled the grant of options, which was at an exercise price of $22. And then they issued a new option at $120. I have seen some companies doing the reverse. If their share price goes down and their options were at a higher underwater, I've seen US companies doing the other way around. And what they did was a masterclass.
So is it still viable? Should I still invest, or what is your recommendation?
Depending, I have no recommendation for you. So if you're looking for, let's say, 5%, 10%, 50% gain, I have no idea what's going to happen for next 2 months. But I'm seeing business continue to perform, and I will continue to hold it in my portfolio and reduce the cost basis. I think I have a strangle on it right now. Not strangle, I think maybe a put spread and a covered call against it.
Okay.
So yeah.
Yes, Vivek, I'm holding this one. I do have like 200 share I got last year. So I'm holding for the long term. I think it's a good investment.
Business is I am impressed with the turnaround in the business, but I think the more impressed was some of the actions that were taken by management. Like I said, I hardly see such a good shareholder friendly actions from management. The companies will be quick to cut employees, but not the CEOs will be quick to cut them, but not take down their own salaries, etc. But this was like completely off the charts. Anyway, so that finished our earnings review. Let's look at some super investors move for another 30 minutes, and then we'll break out for breakout rooms. Before that, any other questions on what we covered today?
Sorry, Vivek, Ravi, I have one question.
Go
I would like to take a last week recording. I left my house early, so I couldn't see the earnings scoop. How can I get that one?
Yeah, so I also always post the link once the recording is up. I put it on a meetup saying, hey, the recording is up now. So you can, okay, let me give you the link. So I just put it on my website. There's nothing much activity on my website other than the recording, and maybe, you can look at some of my old trades, etc. So let me just share you where, okay. All right, so the name of my website is Option Gig. There are many new people, so let me just walk you through quickly, 2 minutes. So recordings, you'll have to sign up for it. There's no charge, but you'll have to register for it. You go to weekly webinars. This is where I have the recordings. Okay, so you have last week, you're looking at macro review, a lot of earnings and all that stuff. So it is available here. Okay.
Okay, copy. Thank you. Do I need to sign in?
You'll have to sign in. You'll have to sign in.
Okay, thank you. I got it. Thank you.
A lot of people ask me about options, etc. So last year, I've done, I think, 4 option boot camps. I didn't do anything in 2025 because life get busier. So you can see all those recordings here, right? Very basics, very new to options, intro, how to use call options for monthly income, the whole process of assignment, all that stuff, option strategies for growing smaller accounts, move to intermediate as you become more familiar. You look at early assignment race, multi-legger, right? Iron condor, iron flies, strangles, straddles, trading closing checklist, and finally the advanced one where I talk about this delta stuff which I was referring to, right? How to manage your deltas, what are Greek, theta, vega, gamma, rho, manage risk, which is what I'm focused on. Most of my trades are right now risk management trades. So all these things are here. Again, you don't have to pay for it, but I think you may have to register, and all the recordings are up here. What I've also did, I think this week, I don't think I'm finished with that, is you can also look at the last 3 months trade. I think that's a limit I have. but with a lag of 2 weeks. I don't want any one of you to just start following what I'm doing. So basically this shows up from a last 2 weeks and goes back all the way to 3 months. So you're looking at, it does not include my hedging the portfolio trades. So that's too many and has got no value for you. The idea is not to look at the trades, but to more on the comments, right? The thesis, why I did what I did, right? For example, on this goes from 8-1 because today we are 8-15. 2 weeks ago, what did I sold Amazon? Sold a short put on Amazon near 20 delta because the market punished the stock after earnings. It's down 8%, but I don't see major risk. AW growth has slowed, but it doesn't deserve this reaction. And on 808, it got close at my profit target. Sold an iron condor and ASML. It's an unbalanced one. Sold 2 coupon short puts, adding more deltas to non-US countries. So that was my thesis. So idea is not to look at the idea is to focus on how you think about creating your trades, right? And you so that you can create your own trades, improve your thinking process, right? Last 3 months trades. Then have an open trades, which are the trades that are still open but were created 2 weeks prior, right? So that list will be small. These are the trades that I've created 2 weeks earlier, but are still open. That ASML trade that I showed is still open. I haven't closed it. I have a GM call. I have a short. I have a like short put and a covered call against Google, which I think I rolled up. I have a Meta, which I rolling out the short put, adding long put to maintain the risk. Blah 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 blah. These are the open ones. So still holding back from PLTR. I have PLTR. I have a covered call on PLTR, which this is the caller. It will get, let's see, this is September 1. So it's a caller at 175, 140, the share. So I have a no risk under 140 and 175, it gets called away. I'll see. I only paid 13 cents. So not at almost a no cost insurance. And if it get called away, I'll see. Near September, I'll see what happens. So that's it. Okay. And I don't know anything on a podcast. But yeah, these are the two main things you should look at. All right. Okay, let's get into the super investors move. Let me bring up super investor stuff. So I do every quarter when we have a 13F filings coming from so-called smart money. I look at all the data from almost 90 fund managers. So for example, these are the list of fund managers that I compile the data. Some of them are very famous people. Some of them may not be that much. Altimeter Capital, Silicon Valley based Belly Gifford, UK-based Bill and Melinda, Bill Ackman, Pershing Square, Bill Miller, Value, Bridgewater Associates, Ray Dalio, probably would have heard that. Carl Icahn, you must have heard it. Chris Horn, great investor. Kutu, Aditya's favorite. And thank you for asking me to add that. Daniel Loeb, third point. Oops, Ironhorn. Third point, then we have David Ironhorn, Green Light. What else? David Tapper, Appaloosa. I'm only looking at the names. That is Stanley Druckenmiller. You get the point. Howard Marks, Oak Tree, and a bunch of these. Warren, somewhere there's a Berkshire Hathaway also. Did I miss it? Warren Buffett, whatever. Anyway, we'll see. So yes, so these are the, I combine all of them, and then we're gonna look at what, there we go. What do I see from these fund managers? Okay. All right, so let's first look at all holdings top 10 holdings from fund managers. This is across all of them. Right. So the biggest one is Warren Buffett. Right. It's looking at $224 billion. This is as of end of June 2025. Right. Things could have changed in 45 days. But this is what as of end of June. Second is Belly Gifford. I never realized that it's got like $61 billion asset under management. I know about this. They are one of the pioneers in e-commerce / marketplace. They were early investors in Amazon. They were early investors in Mercado Libre. So I know that they got a knack for identifying marketplace economies. But what I did not know, that it's got a $61 billion AUM. Chris Horn, blah, 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 blah. So these are the top 10 holdings. I'll show you the top 10 holdings of these. So if you look at Warren Buffett, Apple is still the top despite what he's been selling. Right, $57 billion, Amex, Bank of America, Coca-Cola, Chevron, Moody's, blah, blah, blah. Let's look at, well, everyone knows about Warren. Let's look at what Bailey Gifford is holding. Mercado Libre makes me happy shareholder. $7 billion in NVIDIA. So this is a little surprising to me. $7 billion. Because I thought it's more of a e-commerce marketplace, Spotify, right? Kind of a marketplace for music streaming. Amazon, C Limited. That's good. Coupang, Shopify, Meta Platform. These are its top 10. Right? C Limited, I'm intrigued because it's like $6 billion on C Limited. So I want to see who else is in C Limited. There we go. So we have, if I total this up, this is not on the value side, right? So let me total this up like this. $11 billion in C Limited. That's huge. And we got Bailey Gifford, Howard Marks. Bailey Gifford is the biggest one. Tiger Global, $2.5 billion. I think I like this. Lot of folks are interested in C Limited. We also see who else is on Coupang. $7 billion. Again, Bailey Gifford is a big on Coupang. So allows me, this allows me to basically look at not only at an individual investor, but overall the community wise, who is doing what. So any fund manager you're investing in, and Q2 is a tech. Q2 is a big in CoreWeave. 8% is in CoreWeave. The rest everything is Meta Platform, Amazon, and Taiwan Semiconductor. Okay. Kathy Wood not there. No. Kathy, I don't think I have ARK Invest. No, I don't think ARK Invest is in there. Let me search for ARK. Oh, that's Markel. No. Do they? It doesn't. I think some of the, maybe I should look for it in terms of these are the ETF issuer, right? I don't think they manage private money for others. So I don't think they have a requirement to file 13F. Terry Smith is a UK based. A lot of value investors love this guy. Meta Platform, Microsoft, Striker, Philip, IDEX, Visa, ADP, etc. So that is one way I look at a data is see where the biggest money is investing most of their stuff. What I also want to look at, I think someone had a question on, is there a way to go through latest buys of these folks? Yes, you can come back and here's look at what these people are buying or selling, right? In Q2, Pershing Square. Pershing Square increases position in Google by 20%. GOOGL. What else he increased? It sold completely Canada Pacific. New positions added in Amazon. Wow. 9.3% of its portfolio. Bill Ackman added 9.3% in started a position in Amazon. So which fund manager are you interested in? Someone else, right? It was Vinay. Which fund manager are you interested in? This is for you guys. I am trying to build whatever from my perspective, but you can ask me, you want to look for a particular stock. Monish Pabrai. Oops, Monish. Mr. Pabrai. New position only in Auto Nation. Added Warrior Metcoal, Villaris, AMR, Noble Corp. There is more in coal. I think 3 of these, 4 or 5 of these are coal. And didn't exited core CNR, it exited and added to Valaris and Alphametric AMR. So I think here I had another one in terms of, okay, who else is in AMR? Let's say Monish biggest position is Warrior, and I want to see who else is in Warrior Metcoal. HCC. Third Avenue Manager, only 2-1. Right, but Monish is like 30% is in this company. DoorDash. Well, let's do DoorDash. DASH. You got Belly Gifford, $2 billion in DoorDash, but he reduced his stake by 25%. Bridgewater, 177 million. And yeah, all of these people are in DoorDash. Okay. All right, I'll give you another. I looked at the Tiger Cubs. So the Tiger Cubs are the folks, like you have a PayPal Mafia, you have a Palantir Mafia in entrepreneurs. On the investing side, money management side, there's something called Tiger Cubs. So these are the folks who had worked with, the CEO of Tiger Management, Julia Robert. His name is Julian Robertson, and were trained under him. Julian Robertson is a legend in hedge funds and Wall Street. So these are called Tiger Cubs. And I was looking at overall where the Tiger Cubs have invested, top 15 combined positions, because these are considered to be sharpest minds and the sharks. They're all in the big Max 7. What surprised me is the C Limited. So that makes me happy, shareholder of C Limited. But the top positions are the big ones, Max 7 and the Taiwan Semiconductor. Right? Which is interesting. They're trying to stick to the biggest and the brightest, the biggest companies. I think I did tweet yesterday saying if you are thinking the Max 7 is dead, as the Max 7 is lag 7 and all that stuff, then I guess, hold on, where's my... Okay, let's go through it. Yeah, okay. So this was a theme that I had explored and tweeted about it. Are the Max 7 or lag 7? So keep Tesla aside. I looked at all these 6. Number of dollars committed. Top $10 committed stock out of 89 funds. are these: Apple, Amex is because of Warren Buffett, Microsoft, Amazon, Meta, Alphabet, Nvidia. All the 6 Mag 7 are in the top 10 most dollars across all the 89 funds. So it's not dead yet. Then we looked at the breadth of the holders. Is it too concentrated only in 5 or 6 fund managers? Or maybe 10 fund managers have collectively put in so much money? If you look at the breadth of the holders, how many funds actually have this? Alphabet actually got 2 because they got 2 different takers. So when I looked into the details, Alphabet is 52. If we combine both the takers and see, 52 funds have invested in Alphabet. Microsoft 45 funds, Meta Platform 39, Amazon. These are the leaderboards when you're looking at the breadth of the holders. It's not that 2 big fund managers or 5 big fund managers have pushed the dollar amount. No, it's being most widely owned stocks. But did they held these stocks like 5 years ago and just basking in the glory? I want to see, do they still have a conviction? So look at another way. I looked at top stock positions added by most fund managers out of 89. 20 fund managers have added in Alphabet, 14 added in Amazon, 14 added in Nvidia, 13 in Microsoft, 12 in Meta Platforms. Top 5 positions go to one of these Mag 6. I think Apple, because Warren Buffett is the one who is the most Apple. People have not added Apple. Only 7 added Apple to their portfolio. United Healthcare, only 9 fund managers added position. So I think the street still has confidence. So the firms are still buying this offer. So if you are thinking, or maybe how much more runway there, as of end of June, the big or the smart money managers are still committed to this consensus trade. To me, this seems to be the consensus trade among the so-called smart money managers. Right. I've yet to add a little more things to it. I think other thing that I shared was around around the chip stuff. All right, go to my profile. Should be there. I made okay on UNH. Lot of stuff around UNH. Right. Total value of UNH holdings as of end of 2020, end of Q2 is $5.9 billion. The biggest UNH holder is Dodge and Cox. Everyone talks about Warren Buffett. Warren Buffett got $1.5 billion, and it is 0.04% or 0.06%, too small. So you got Warren Buffett, 0.6% of its portfolio is in UNH. And the Twitter is like, oh, Warren Buffett bought UNH. Every one of you should go in UNH. Right? That's not a huge commitment to UNH. So tame down your enthusiasm. I think Dodge and Cox, which is the biggest holder of UNH, has more commitment to it. Maybe I should add a value here as well, so it will round off everything to. Oops, not over here, but sum of portfolio. So $1.8 billion, 1.7% of portfolio, right? I'll probably go and read more about Dodge and Cox and what they have to say about UNH as a company. Then, or maybe read David Tepper. He's put 11% of his portfolio in UNH rather than reading Warren Buffett's thesis around UNH. That's like you don't feel anything if UNH goes to 0. You should read David Tepper or Dodge and Cox's thesis around UNH. That's how I'll try to interpret the data. Okay. What else we want to look at? So we looked at Tiger Cubs. I also want to look at EV stuff, right? Now you tell me the EV company name so that we can add to here. I got a GM $3 billion. Tesla's, forget about that. Let me give you another interesting stuff. Was the chips? Oops, not that one. Yes. So this is going to be a little eye chart, but I think it'll be good to know from a chip. So I consolidated everything around what I consider as a chip market. NVIDIA, TSM, Broadcom, Texas Instruments, Analog Digital, Lam Research, Applied Material, ARM, AMD, ASML, Qualcomm, Cadence Designs, KLA Corp, Micron, Intel, Synopsys. If you have any other big chip company that I'm missing, do let me know. And I say, what's the smart money doing around these chip companies? The biggest dollars, no surprises, is with NVIDIA, 19 billion. The second biggest is around TSM. So this is basically the fabrication plan, right? Look at the Intel, hardly. I mean, if there was no David Tapper, Intel wouldn't even had $1 million invested in it. David Tapper came and saved Intel. He released on 15th August. Because as of 14th, Intel was at the end. It's not even $1 million. But David Tapper came and saved Intel with $180 million of his investment. No one is on Intel. And if you think David Tapper is a smart investor, he finds out the trend before anyone else. He is big on Intel, no one else. TSM now seems to have become a consensus trade. Everyone is loaded upon TSM. I think the biggest position is Kotu, $1.8 million. Then Tiger Coleman, Tiger Cubs are big on TSM. Third is Broadcom. So if you are holding Intel, thinking smart money is probably piling up as of end of June, no, smart money is not in Intel. So that's on the chip side. Mag 7, $226 billion invested in Mag 7. So overall, I think it has got, I forgot what the total sum was across all these 89 fund managers. Hold on, I think I might have a data somewhere. Somewhere on the top, $1.2 trillion. Out of $1.2 trillion, 226 million is in Mag 7. And if you are a Tesla bull, I don't have a good news for you. Only $1.5 billion is in Mag 7. Not even a percent of Mag 7 investment has gone to Tesla. Wall Street doesn't like Tesla, or didn't like it as of June 2025. I have to say that disclaimer. Not much love for Tesla. They're still staying with Apple's, Microsoft, Amazon, Meta, the other top ones. But if you do want to know, the other one, I was trying to build different theses. Fintech stocks. This was really surprising for me that XYZ, which is Block, formerly known as Square, has got a biggest allocation. $1.9 billion. And Twitter only wants to talk about SoFi as a fintech company. The next biggest fintech company of the world is going to be SoFi. That's in the last. Now I need to go and read what Bailey Gifford is thinking, or his thesis around XYZ is. Because I moved it from my growth portfolio to moonshot portfolio because Jack Dorsey is now only all on Bitcoin. Cash App and the Square, yeah, fine, but not getting much of his attention. So I moved my money saying this is a moonshot, means too risky. But now I have to revisit this because Bailey Gifford has got sizable position in it. So this I want to use. And across, if I look at everyone else, it has commanded the highest dollars. Chime, which was recently IPO'd, has got more than $1 billion. PayPal is number 2. No, on only the value investors talk about PayPal. Jonathan XYZ got added. Yes, it did get added recently. But this is as of June 2020, end of June. So it got added after that. So there has to be, the thesis has to be something different, not S&P 500 flows coming in by default with this. Right, and these are the positions which are individual stock positions, but these were data before June. So something is, so I need to maybe go and read about what Bailey Gifford has to say, or Viking Global Investors. They're the 2 biggest holders. Any other fintech in your mind? NU, good. Brazil Bank growing like crazy, 120 million people, customers. Let's add that. Thank you. Oops. Wow. Whoa. Nu has a Bailey Gifford. $3.5 billion, and that pushes up Nu. Even if Belly wasn't there, it would have been number 2. Take Belly out of it, it will be $1.5 billion, would have been number 2. Wow. Okay, need to update and go read about Nu again. I had reviewed this when it came for IPO, or not IPO, maybe in 2021 or 2022. Nu Holdings. And maybe time to look at it again. Because it's on a banking side, I'm not too huge on the banking as an individual stocks. But if it moved beyond banking into other stocks, this seems interesting. At least the other street is paying too much attention to it. 4 is a payment, right? Shift for payments. Then we get into the 4 and Clover and all that stuff. Yeah, only one. Dennis Hong. So it's not a concern, not much. I won't pay much attention unless you love Dennis Hong. There's only one fund manager who is in Hong, or who is in Ford. But good on Nu. Need to brush up the thesis. Any other fintech? Or we move to different theme? Okay, guys, 12:30. Let me open the breakout rooms. And then those who want to get into the breakout and want to talk about whatever you want to, go at there. I will continue on this, going through this super investor stuff. So breakout rooms are open. If that's your thing, go into the breakout rooms. Or if you want to look at the super investors, you're most welcome to stay here. But I think I'll probably spend more time, me personally, will be spending on the super investors. Nicole, do you share this sheet? Nope. Maybe there's a business opportunity. I don't know. Will I be sharing the sheet? No, because I realized that I'm on one of WhatsApp group. There's got a lot of European investors, non-US investors are in there. I saw one of my screenshot from Twitter showing up there. I just did it. I've been improving it just because it's useful for me, and I want to come and talk about it, make it useful for you as well. Okay. Maybe later point of a time. Right now, I'm just focused more on managing my and building my portfolio, not trying to stay away from other business opportunities. There are a few that I have in my mind that have helped me become much better investor over many years. But I will probably look at those business opportunities maybe a year down the line, not this year.
Vivek, I have an idea / suggestion. In the evolution of this sheet,
Tell me.
I'm thinking, like, I'm seeing a lot of guys on LinkedIn and Twitter using AI and recent LLM models and get them to use portfolio theory and other stuff to make investment suggestions. So they basically give it a good query and it goes away and comes up with suggestions.
Mhm.
So I wonder, and would love your thoughts on this, if that could be another tab on this to say, this is what smart money is doing, and this is what smart AI is suggesting. And now,
So let's see, smart money is fact.
yes,
Okay. AI suggestions is what AI think could happen in future, which no one knows.
and no skin in the game.
No skin in the game. Number two is so I use AI to do business studies, company in-depth analysis. I don't use AI to tell me whether I should buy or sell the stock because AI doesn't know me and my portfolio, what kind of investor am I. So I'm very skeptical in saying pick any AI, whatever the AI model is telling me that CoreWeave is going to be a good business to own, or pick any other business, right? Let's say Mercado Libre is going to be a good business to own, right?
Yeah.
But it may not be a good business to own for you. It is good business to own for me. Why it may not be good business to own? Number one, it is outside of a US and you may not be familiar with how the Forex will impact you. And you may not want to take that risk. Number two, it is in a developing country, it's in a Brazil and facing a competition. So there could be short-term volatility in it. What if the stock goes down 20% before it becomes a multi-bagger? Are you able to withstand that 20% drop down? I don't know. I may be.
Yeah.
There are many reasons why one investment will be good for one person and may not be good for others. And that is why I don't have much faith because the AI doesn't know me. It only knows Mercado Libre. It's like when you're buying a stock, you are having a precision medicine. You know the medicine, you don't know the patient.
Yeah.
And for it to work, it has to work both patient and the medicine has to match.
Absolutely. And I mean, I'm just thinking of it as an idea generation thing, but then also I like for the results to be relevant, and this is where I found you can just pile on the initial query with, okay, make it US specific, make it, I already have exposure.
So AI needs to learn about me. AI needs to learn about me and me as an investor.
Right. Absolutely.
Right now, these are so new. I think maybe I start using Notebook LM more, then it'll start to learn about me, but I think it'll take time. And right now, AI anyway hallucinate a lot. So anyway, so coming back to this, any more fintech company? Otherwise, I'll move to, we can maybe create another, like a theme like this. No other fintech. Let me see. Crypto bets. Let me refresh this. So I picked Coin and Circle when I was looking at a crypto bets. Okay. Hopefully not a pie chart. If it is, do let me know. So Coinbase only one and Circle, a couple of them. Any other company you consider as a crypto company? Nope.
Stuff like MicroStrategy or something like that.
Oh yeah, yes. How can I forget that? MSTR. Not Bill Miller. Okay, I understand Bill Miller. They have been early investors in Bitcoin. There's a huge proponent of Bitcoin, so not surprised that they have a little stake on MSTR, especially those. I mean, because they've been selling a lot of these preferreds and other stuff, right? And I don't think these fund managers bought MSTR directly. Who we already looked at under the fintech, right? So Hood is there under fintech. $314 million under Hood. Riot. That's interesting. Riot. Nope. At least it's 89 fund managers. No one has Riot. RIOT. Let's look at Mara since we talked about Riot. Nope. Only retail investors are like crazy about these. Any other miners? BMNR. BMNR. Oops. So let me also take a note so that next quarter I'll again try to search for it. Apart from these three. Let's move to the next one. Yeah, this is very favorite. These are the stocks that I put up, which I see a lot being talked among the retail investors on Twitter. Tesla is obviously there. Grab is a new favorite. Hims and Hers, right? Hood, BlackBerry. Lone Warrior on BlackBerry's Prem Vatsa, the Canadian fund manager. Circle, we looked at Coin, we looked at SoFi, we looked at Oscar Health and Palantir. Jim Cramer is crazy about Palantir. A lot of retail investors are crazy about Palantir. Street doesn't think that it deserves the stock price where it is. Not much upside. $0.6 million invested in Palantir. Tesla, any other hot favorites? So this is basically the hot stocks, retail hot stocks. Those meme stocks or, the flavor of the month stocks. CELH, I remember. Celsius used to be the... No? No love for Celsius? Okay, take a note for later on. Any other one? None of you have any hot stocks in your portfolio that you want to look at? I'll go and read some of the comments. CRVW. Okay, hold on. Let's CRVW. Okay. Like CoreWeave, I have on under other theme, which is AI theme. So I'll show you the AI theme. GDX is an ETF. GDX is not a hot stock. It's a gold ETF. Which retail investor care about gold stuff? Jonathan, who retail investor talk about gold stuff? I don't think there's a ETFs in this, because I tried to search for other ETFs. It is. So let's add GDX and GDXJ. Probably very small. It's like I'm rounding it off to million, so very small. GDX has got a better than Palantir, 5 times more than Palantir. BMNR is not even there because I think I tried on a crypto. BMNR is not there. Oklo, yeah, good friend Oklo. Should we add Oklo to the AI? I should add Oklo to the AI theme also, right? So let's say Oklo. Why not do CoreWeave here? Oops, hold on. Oops, CRBW. Oops, WV. Add to the current one, and then Oklo. OKL. Nope. No one is interested in Oklo. OKLO. A-Lab. A-Lab is which one? Is that the... No. Which is A-Lab? Is it Albert Mill? Okay. What? Okay, because it will... And Astera Labs. Okay. Nope, no Wolf. No love for Wolf. GEV. GEV is a prisons, right? GeoPrism? Or am I confusing with someone else? Is okay, hold on. I think one which I have seen on Twitter, Rocket Lab. Is it like competitor or in a similar space as SpaceX? Oh, G Vernova. Who in a retail meme starts talking about G Vernova? We can look at a G Vernova. Let's look at the G Vernova and the individual stock and see. We got a Bridgewater, Cotu, Chase, and Christopher Bloomstrand. What is a very small position? I think Cotu is big in GEV. So I don't think it's some kind of a, this is the meme and hot stock list. Yeah. All right, let's move to the AI stuff, right? I think I have the AI somewhere. I need to maybe group them and okay, retail favorite we already looked at. Okay. Oh, may not be on this sheet. This is the dollars. Oh, I think on my activity sheet I was trying to build. I was trying to build on my e-commerce marketplace. We already looked at this. No, we did not look at the marketplace or e-commerce. Semiconductor AI. Okay, so what the heck? This rather than polluting my own, let me create another one for the AI thing. AI. Let's start here. I think it messes up the reference. What am I doing wrong here? One second. AI. AI starts. Okay. So these let's start building our AI list. So we'll keep NVIDIA. We'll keep TSM. I'm gonna take off ADI. I'm gonna take off AMAT. Let's add CRWV. Let's add Oklo is nothing is there. GEV. I'm gonna take off Cadence.
What about SMR?
SMR. No one is no one is SMR. Small modular reactor. Oh yes, there is someone on SMR. SMR. I'll take off these design companies. Just one second, getting ping. Sorry, I was called. I have a hard stop at 1. I need to drop my kid. The local boss called me. I'll take off Intel, man. Intel lost the story around AI. I'll take off others. So tell me anything new to be added. CEG. What is CEG? Okay. Okay, so now for a moment, let me just take off these two because TSM and NVIDIA are like so big that they are all okay. Do a freeze pane here so that at least I can see. Okay, this might be better. Okay, let's keep it there. GV, $3 billion. Who all is in GV? Kotu mostly. So yeah, the Kotu is big in $13 billion is in like some of these companies that we're looking at as an AI companies. And if I recall, their overall portion is Kotu has got how much? $20 billion? Wow. Out of $20 billion, $13 billion has been 14 is it's all AI. Oh, CEG is Constellation Energy. Okay. PLDR, I'm not going to add in AI, whatever they may say. PLDR hardly got any traction anyway. But it's the AI software because then right now I'm only looking at the AI enablers, not the companies that are benefiting, creating software on top of AI, because then there will be a lot more stuff. ASML is AI play, ARM could be. These are the anything else, any other energy companies which are doing AI plays. Oh, okay. David earlier asked for ISRJ, so I need to respond to that. VST, Vistara, yes. VST, this one of $2 billion. Lone Pine has got 1.2 billion. That's the maximum. That's the biggest one. Then David Tapper has this. So PP TSSI TSS. Nope, there's no TSSI. PPL, there's no PPL. NBIS is now being projected as a next NVIDIA next core weave in Twitter. Oh, NBIS I should add that for our hot stocks, retail hot stocks, right? NBIS is right now hot in on Twitter, but anyway, there's no one is in NBIS. I'm worried about TTD than ISRZ. TTD shows up. Let's look at that. Let's create another one with the more copy. Let's create one for. Okay. Ad tech. Okay, we'll put TTD in it. One day I need to put all these together in one sheet. Okay. TTD. Get rid of everyone else. Barely get for $2 billion. Pubmatic. PUBM. Pubmatic. Anyone in Pubmatic? Is it PUB or PUBM? Pubmatic. Okay, I got the ticker right, but unfortunately, no fund managers. Magnite. Let's look at Magnite. These are like sell-side platforms. Okay, we have some love for Magnite. Amazon took away. Yes, Amazon is in DSP as well. I think there's a news around that Walmart may be looking to move away from TTD. That's a big bummer for TTD. So if you're in TTD, we should be aware of that. Any other ad tech stock? Pins is okay. Let's add pins. More breadth, but less conviction. Adobe. I think one day maybe I should also look at these cash flowing bit. Start to explore themes. I'm still trying to think through how can I make use of this data and in various form factors, like maybe create a themes. Yeah, Adobe is good. What are people on Adobe? Well, let me do one thing and see, is Adobe love coming from, is it old history, or is it somebody actually added to Adobe? Yeah, so yeah, there were some decent additions to Adobe as well. And maybe I should add a value here. How much is the money in Adobe? Poland Capital. Poland Capital they're really value invested investors. I mean, I've heard his chief investment officers, etc., on a podcast. They're very prudent investors. So they increased their allocation to Adobe by 20%. 0.72 is Steve Cohen. Those are mostly like hedge fund guys. They'll buy and sell. This must be a little temporary, but Poland Capital is a little more long term. So maybe you should go and look at their investing thesis, their reason behind why they want to buy Adobe. But they bought Adobe in Q2. Yes. Who exited it? Wallace Weeds exited it. I don't know. I'm not Cantillon Capital Management. Okay. Thing. All right. Past performance doesn't guarantee. Yes, that's what I'm saying. Go and read the thesis. Not that they bought it. Read the thesis, what their thesis is about investing in Adobe. We should be talking about the future. Okay, I gotta head out in another minute, but maybe if you're okay, we can cover some other themes for the next week's session also. We have an ecom theme to explore. We have EV themes, China, Maxim we looked at, retail favorite we already looked at, and maybe some other way of looking at top stock positions added. I think that we already looked at. Positions reduced, and then some other one. Yeah, top tickers, most funds that acted on. Top added was this, reduced was also this. So this is like a musical chair. between the top big ones. New positions, C limited. I'm getting a little more, this is becoming a little more bullish on C limited. It's a number 2 in terms of the number of funds that have added new position. Who are, okay, won't be able to expand here. Oh, okay. Howard Marks, Poland, Daniel, and Stan Druckenmiller. All, at least I know 2, 3, they're all seasoned investors. Okay. All right, gotta go. But hopefully you like the way into combine and you get a little more insight rather than by looking at just one particular fund manager's activity. So I really want to look at across what they're doing. And maybe we'll continue some of this on theme next week. But if you are on Twitter and if we are connected, I will be posting it on our Twitter as and when I create another data set for another theme. Probably, maybe this week will be the last. And then I'll wait for the next quarter and restart this exercise. Every quarter, I try to add something new that I've not done before. All right. Thank you, everyone. And thanks for joining in today. And we're gonna, hopefully I'll see you next week. Those who joined for the first time, I hope this was useful for you guys and we'll continue to participate. And let me see if there are breakout rooms. Do I need to make anyone else? There is no one in breakout room, so I guess everyone ready to go home. So let me close it. And let's close this meeting as well. Thank you.